So to conclude my talk, I now want to focus on kind of what are the steps that firms and professionals need to take to evolve us to this future state in which sustainable investing is a more mainstream part of investment management and can play a positive contribution towards societal objectives around the net zero transition. And so here are the 6 steps that we call a rubric for progress. First, the ESG education. So building on my previous slide, we see significant knowledge gaps in the area of sustainability and ESG related topics. ESG knowledge and skills need to be developed to a critical threshold across the industry to better equip firms to make the transition towards the future state where sustainability is a mainstream part of the investment process. Secondly, we also need to embrace, as an industry, system level thinking. So this understanding and acknowledgement that value is not created in a vacuum, that there are spillovers and externalities, and that there are ripple effects between corporate activity, the environment, and the base of natural capital, which is the bedrock for corporate enterprise. And so how we think about these system level issues and build them into a more cohesive investment model that goes beyond the 2-dimensional view of risk and returns is an important component of making progress in the sustainable investing journey. It's also worth calling out on this point the systemic nature and risk of climate change in particular. When you think about systemic risk, climate change is the very essence of it. It is an exogenous shock. It will affect all companies and markets. And if this risk is not managed and mitigated, then clearly there are, will be material consequences for the valuation of investments and portfolios. So this really will require what we call out in the 3rd point, collective action or collaboration synergy. So these challenges around systems issues and the net zero transition are so large and difficult that no single organization can effectively solve them on their own. We are believers that there needs to be effective collaboration across firms in the industry, with coalitions, with like-minded industry organizations, such as the PRI, to affect change and use the combinatorial power of collective action to drive better outcomes from a sustainability perspective. The 4th area needed for progress is ESG data. So currently we have an abundance of data, I would say, but a lack of consistency and standardization in terms of how that data is prepared and sourced. Part of it speaks to the need for harmonization in corporate reporting standards. There's clearly a lot of work taking place right now with the International Sustainability Standards Board under the remit of the IASB. It is hoped for investors that this will lead to more consistent and thorough disclosures around climate-related issues and broader sustainability risks. But beyond the world of structured data, there is a plethora of unstructured data that is being made available to analysts, and how firms are able to use technology to harness this unstructured big data, feed it into the investment process, and build a more holistic view of risks and opportunities is an important area for development, and provides firms with the opportunity for really extracting deeper insights around how sustainability risks and opportunities are created. The 5th point is around innovation. So we've seen in the slides here the demand drivers for sustainable investing products and strategies. We see, particularly amongst the retail investors, that personal values and beliefs are a key motivator for demand in this area. Firms will need to meet that demand by innovating and creating new products that address certain themes that align to those personal values and beliefs, and allow for greater personalization and customization of products and investments. One example is the recent growth of personalized index products, which allow a sort of a custom index that is created to match the given investors' objectives, motivations, and values And we now have the technology that allows these personalized indices to be created at greater scale. And so that's potentially an opportunity for innovation in the ESG and sustainability area. And then the final point is on culture. So positive ethics and values need to be woven into the organizational culture in order to really ensure that there is sufficient governance and incentives around sustainability in the business model, but also to attract and retain talent as well. I think going forward that having a strong culture and a value statement towards sustainability will be necessary if you are to attract younger professionals into your firm and to tap into the expertise that you will need to be effective in this area. So with that, I just have one slide I want to briefly mention when it comes to how we address some of the opportunities for knowledge and skill building. CFA Institute has its own certificate in ESG investing. Some of you may be aware of this. There is full information on our website. It is a self-paced, self-study course that is delivered digitally through our online platform. And I won't go into the details of this particular certificate on today's webinar, but I encourage you to take a look at the website if you are interested in learning more about this.